Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings. Today we're cracking open a Form 8K from Gaucho Group Holdings, and trust me, this one's a real roller coaster, not the kind you want to ride. It involves delisting and potential financial peril. Fasten your seatbelts, it's going to be a bumpy ride. This Form 8K filed on March 26, 2025 is like a corporate distress signal. It's a report companies file to let investors know about big, important things that are happening, things that could affect the stock price. The main event, Gaucho Group Holdings is getting kicked off the Nasdaq stock market. That's right, they received an official notice from Nasdaq that they will delist the common stock and that they will file a Form 25 with the Securities and Exchange Commission. This is never good news for a company. It means their stock no longer meets Nasdaq's listing requirements. It's like being told you can't play in the Premier League anymore. Now, the stock isn't disappearing completely. It's still being traded, but on the over-the-counter market or OTC under the symbol VINOQ. Think of the OTC market as the minor leagues of stocks. It's less regulated and generally it's a sign that the company is having trouble. There's also a section called Regulation FD Disclosure. This is where the company shares additional information that might be important to investors. In this case, it is their Nasdaq delisting notice. The company is giving a serious warning about trading their stock. They say, and I quote, trading in the common stock during the pendency of the Chapter 11. Reorganization is highly speculative and poses substantial risk. They're basically saying, hey, if you buy our stock right now, you're gambling. Chapter 11 reorganization means that the company is trying to restructure under bankruptcy protection. This usually means a company is having serious financial difficulties. Let's have a look at the exhibit included in the report, a press release about the Nasdaq delisting. The document is signed by Scott L. Mathis, President and CEO. This tells us who is accountable for the information being reported. So what's the story here? Gaucho Group Holdings is facing some serious headwinds. The delisting from Nasdaq is a major setback. It makes it harder for the company to raise money and can scare away investors. Trading on the OTC market is less prestigious and can lead to lower stock prices. And the warning about the stock being highly speculative is a red flag. It suggests that the company's future is uncertain and that investors could lose their money. The reference to Chapter 11 reorganization is another cause for concern. It indicates that the company is struggling financially and may not be able to survive without restructuring. What are the strengths? Honestly, it's hard to see many strengths in this situation. The company is facing significant challenges and the future is uncertain. As for weaknesses, the delisting, the financial difficulties, and the cautionary statements all point to serious problems. One big risk is that the company may not be able to successfully reorganize under Chapter 11. If that happens, investors could lose everything. On the other hand, if the company can turn things around, there might be an opportunity for investors who are willing to take a big risk. In conclusion, this Form 8K paints a pretty grim picture for Gaucho Group Holdings. The delisting is a major blow and the company's financial struggles are a cause for concern. While there might be some potential for a turnaround, the risks are high and investors should proceed with extreme caution. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, subscribe, and let me know in the comments what filings you'd like me to decode next. Until then, stay informed and invest wisely.